Well, Australian markets have just opened and have fallen in line with the US overnight after the Federal Reserve Chairman Jerome Powell all but confirmed that interest rates will be raised 0.5% in just a few weeks from now. Business Editor Ross Greenwood joins us happily on this Friday. Ross, does this affect the timing of the Reserve Bank rate decision?
I've got to tell you, Laura, it's going to be pretty important because the Reserve Bank here is going to be watching this very, very closely. Just taking you through the markets now, there's been a big fall right at the very start here, down almost 1.5% as we speak. It's iron ore miners that are getting hammered at the moment. BHP down almost 5%, Champion Iron down more than 5%, Fortescue down 3.5%. So really this is in response to what's taken place in the US overnight and the fall in the Dow Jones index. And that all came straight back to what Jerome Powell had to say. And yes, it has to have an impact on the Reserve Bank here because clearly it's now well behind the curve. There is an argument, a very strong argument, it should be raising interest rates in May when it meets just in the next week or so. And certainly Jerome Powell, when he was asked about this overnight, certainly gave the strongest indication that the US Federal Reserve will raise rates by 0.5% when it meets in May. Just have a listen.
For example, if you look at the last tightening cycle, which was a 2-year string of 25 basis point hikes from 2004 to 2006, inflation was a little over 3%. So inflation is much higher now, and our policy rate is still more accommodative than it was then. So it is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So that does point, that points in the direction of 50 basis points being on the table. Certainly, we make these decisions at the meeting, and we'll make them meeting by meeting, but I would say that 50 basis points will be on the table for the May meeting.
All right, OK, so his bigger warning might have been the prospect of another recession. We don't hear our Reserve Bank or indeed any of our politicians speaking like this.
I can guarantee during this election campaign you will hear no politician talking about the prospect of a recession in Australia. But the real problem is if you can't get on top of the inflation, and the central bank, your Reserve Bank here in Australia, has to really play catch up and has to really try and raise interest rates very sharply to try and cut it, that inflation out, then the prospect of recession does increase. And really Jerome Powell was very honest when he actually answered the question about whether they could address a soft landing, make the economy land softly. He says there's risks to that, and that risk is a recession.
You asked about a soft landing. Basically that's our goal. Our goal is to get demand, use our tools to get demand and supply back in sync, so that inflation moves down, and do so without a slowdown that amounts to a recession. That's our goal. And I don't think you'll hear anyone at the Fed say that that's going to be straightforward or easy. It's going to be very challenging. We're going to do our very best to accomplish that.
Ross, all that said, have the RBA of Australia, have they sat on their hands for too long? Should they have moved much earlier on interest rates?
Well, they've been waiting for the evidence. That's what they've always said. But the problem is some of that evidence is really in the rear vision mirror. The real lived experience that any Australian business could tell you is that costs are rising. So there is inflation in the system. And indeed, if you go out there in the really lived world, you'll find that people's wages are rising. So, the wage indexes, despite what, the Labor politicians are right now telling you, they are going up for most people. Now, the reality is eventually an enterprise bargaining agreements come through, those wage increases will be coming through for Australians. So that means there is inflation. So yes, the Reserve Bank should have probably acted sooner. It's now going to have to play catch up at some point, and that is precisely the problem that the US Federal Reserve has got. And that, of course, raises the prospect of what happens at the end of that raising cycle. So that's the big key right now. And it's as politically important now as anything else in the management of the economy that both sides of politics have got to grapple with.
Yep, and I'd argue it's still all about the economy, even though there are a few distractions along the way. I tell you who's not concerned about a recession, and that is Elon Musk. He says he's got $46.5 billion US lined up to make a takeover bid for Twitter. So it's not just talk, it might be money as well.
46.5 billion lined up. Now, remember that he owns some 17% of Tesla. Tesla's now worth more than $1 trillion US. So theoretically, he's worth $170 billion. So what he's done is not only gone to a whole bunch of banks and also used his own Tesla stock to borrow against that to try and raise the funds to set up this takeover bid for Twitter. And so he's now saying, look, it's not just a case of me sitting out there and thinking we might raise a bid. Remember, he already owns 9%. We now are going to go out there aggressively and see whether we can take it over. So he's had some tweets last night because he's clearly got some very strong views about Twitter and the way in which it should change. Things like, if our Twitter bid succeeds, we will defeat the spam bots or die trying, and we will authenticate all human beings. In other words, he's saying there's a lot of, well, fake news and, if you like, robot-generated news and tweets that are going out there that he wants to get rid of, as among the other things that he wants to do to change up Twitter. But it seems now that this is becoming more serious. And as we talked about earlier in the week, a tender process to buy more shares in Twitter is most likely the way in which he'll do this.
Wow. OK, Ross, it's head spinning this morning. Thanks so much for that. We'll keep a very close eye.
Market's still down 1.5% and around 110 points at the All Ordinaries Index.
Yeah, keep an eye on Netflix for us too. Thanks so much, Ross.